Bloomberg Audio Studios. Podcasts, radio, news.
Well, shares of Travel and Leisure reached an intraday record, rising 15%. That was back on October 22nd. This was the day the company lifted the low end of its adjusted EBITDA forecast for the full year. Shares of the $4.1 billion market cap company are up around 29% so far this year.
Yeah, that's quite a run. We want to bring in our next guest, Mike Brown, president and CEO of the company, which has close to 20 resort, travel club, and lifestyle brands, including Margaritaville Vacation Club, Club Wyndham, and more. He joins us from, I believe, a chilly Orlando on this Tuesday. It's a little chilly up here as well. Mike, great to have you back with us. You operate in a specific segment, timeshare. So talk to us a little bit more about who exactly is your customer. Remind our audience.
Well, ultimately, we're a 100% leisure travel company, and our demographic is around $110,000 of average income, average FICO over 730, average FICO score. Age group, upper 40s, low 50s. And really when you start to think about who likes to travel with us, no matter the brand, they want bigger accommodations, they want consistency of brands, and they want good value for their money. And that's really the space that we operate in. And if you think about these last 5 years where inflation is running high and you've already locked in your vacation dollars, the value component has been really strong and has propelled our growth here in the last 5 years.
How much of your business is sales of new memberships versus people actually just using what they bought maybe years ago?
Right. It's actually one of the best endorsements of people's love of the product is that every year, about 65% of our incremental purchases are from people who already own with us and want either more space or more vacation time. The rest are from our new owner base who are dipping their toe in the water and seeing what this type of vacation travel is all about. So not only are we getting 2/3 of our sale roughly from people who already own with us, what we also see is the people who've paid for their ownership already, there's a 98% retention rate. So two massive validations that once people own, they really love the product and keep buying more.
So, timeshares, they get a bad rap, and they have a bad rap. I mean, if you like just Google get out of timeshare, there are legal companies that specialize in getting you out of timeshares. Right. Yeah, I mean, you know this, you know the industry. Is your product different than what people know as timeshares? Why that bad rap?
Look, it's interesting because I can even feel a little bit uncomfortableness of asking the question because it has a history that predates the great financial crisis. But I think the untold story here and why I love coming on shows like yours, beyond it being a great show, is that the industry's dramatically changed. 85% of the sales today are by companies that you might book your business day, whether it's Marriott, Hilton, Wyndham, Margaritaville, Holiday Inn, Disney. All of these are the brands that have come to the forefront in the last 10 years. And the value proposition, the way of vacationing with a brand you trust is not the reputation that it gained pre-great financial crisis where it was independent real estate developers. And I would just encourage everyone to do your own research about these type of advertisements. There's a lot of press out there that's shown some really negative stories about them. That's for people to do their own research. But what I will tell you is that our retention rate, as I mentioned, 98%, 2/3 buy more. And this is now a massively branded industry that it wasn't when it gained that reputation you're referring to.
So what's like the trickiest, component of your business? Is it properties, management, labor? I'm just curious.
Yeah, it's a complicated business. We run a sales and marketing business. We run a management business. We operate the club so that we can get people from one of our 280 resorts to another, and we access the ABS market 3 times a year to sell our notes and gain cash flow. I think it's the management of all of that together. When you look at our company's performance, the satisfaction of our customer base, and the growth of our brands, we've been highly successful and shown growth and showed a way to grow, and it's shown through in our equity. But it's the experienced leadership to combine several very complicated businesses together to make sure that it's seamless for the consumer and that we're also ultimately fulfilling our mission, which is getting people on great vacations. So I would say it's the complexity of the management as opposed to an individual component that's really hard to operate. I would just add that one component that has become more complex is the development of real estate has become a lot more expensive ground up. So we've moved to a conversion strategy in a lot of our new resorts.
So I want to talk a little bit more about the demographics here of your clientele, and certainly with 20 different brands, it depends on what actual brand we're talking about. You did give us some age demographics and where people are generationally, but in terms of spend, what are they spending? What do you know about where in terms of their other demographics like household net worth and what part of the economy you're able to get?
Right. Well, what we find in our product is the vast majority, irrespective of the brands, are going to want to be in a situation where they want to know what they can expect from their vacation. And a Margaritaville guest is going to want a sand, a drink in your hand, that type of lifestyle. Whereas our newest brand, Eddie Bauer, these are people that want to hike in Zion National Park or get to the great outdoors and enjoy a family reunion. Either way, our financial demographics are what I explained earlier. But what we see as the travel trend is people want experiences that match their personal lifestyle as opposed to four walls, and then they have to go find their experience outside of the resort. So that's why we're launching Sports Illustrated brand, Eddie Bauer. We have Margaritaville, Club Wyndham you mentioned. We see an opportunity to customize your experience inside the resort and outside, as opposed to separating the financial demographics. I will say one of our big focus is to pull the average age down as we launch new brands over the upcoming years.
It's interesting. Like I do think about like how consumers relate to a specific brand. I mean, that really moves the needle, doesn't it? Whether it's Sports Illustrated, I'm just curious. And how do you guys think about what brands you want to affiliate yourselves with?
Right. If I've two children that are young men that are at a university
they're
up
always
north.
Boys to us, right? Or they're always kids.
Yeah,
girls.
they really are. They really are. But I'll tell you, if I were to go up to Ann Arbor and I have the option to stay in an unbranded hotel with four walls or something that affiliates itself closer to the university, there's a natural pull to it. And, I can apply that if you're going to go to a beach destination and you have a chance. And if you're a parrot head and you want to be in that Margaritaville environment versus a resort that's a brand that has thousands of resorts everywhere from the highways to the resort destinations, you're going to go to the Margaritaville location. And our Club Wyndham has a similar type of affiliation. So we just find that people are moving more and more to the lifestyle that attracts them. And we are therefore developing brands that allow them to just do that naturally to enjoy their lifestyle inside of the resort and outside. And it's already been received with a lot of great reception, and we're excited about what we can do going forward.
What's the brand? You have so many different brands. You mentioned Margaritaville. We talked about Wyndham, Eddie Bauer. Yes. What are you missing?
Yes. I think there's a few things that we have to consider. We don't have anything in the luxury space today, what I would say pure luxury. There's a lot of opportunities to tie our type of product to cruise type of companies. And then, as is always the case, someone 5 years ago would have said, well, Eddie Bauer's not a hospitality name, but you immediately put that to an outdoor living lifestyle. And I think our challenge is there's the typical hospitality verticals, which would include luxury, but there's also just niche lifestyle opportunities that we will look for. But if I could just step back a second, the key to our success is whatever we do, we execute against it and we deliver on what we promise the street. And that success allows us more and more access to more and more brands. So I would expect that to allow us to move into these spaces that we currently aren't in.
Well, I'd love to be sitting at Margaritaville vacation or a Margarita Vacation Club with a margarita in my hand. But having said that, before we go, Mike, any signs of stress, any signs of economic, concerns as you look at your business, or maybe what it tells you about the outlook here?
Well, I would say my personal sentiment and what I'm seeing in our business is very similar to what it was 30 days ago, which was there's still uncertainty out there, which causes us to be looking intently every day with any metric internally that would signal the economy is going one way or the other. 30 days on from our earnings call, I would say that our performance and our outlook on the economy looks very similar than it did at the end of October when we reported.
Okay.
Our leisure travel demand is looking good for Q4. With the sound that the shutdown is coming to an end, I was starting to worry that we might start to see changes in behavior between air and drive-to traffic.
Are you seeing that at all? Just very briefly?
We have not, and in fact, it looks like our 25 bookings here in Q4 are at or slightly above where they were last year, and we haven't seen a dramatic change. We've seen ever so slightly the change from fly to drive to, but I'm really confident that had it gone on another week or two into the Thanksgiving season, we would have saw a noticeable shift of people in New York saying, "Look, let me just get to a drive-to destination as opposed to flying to Orlando. I don't want to deal with the hassle with my free time." Fortunately, it looks as if we will avoid that, but at this point, we have not seen an indication that has caused a change in leisure travel.
Mike Brown, President and CEO of Travel and Leisure Company, joining us from Orlando.